For decades on the Zimbabwe Stock Exchange, there's been a name that many consider to be synonymous with stability and strength. To investors, this has been a blue chip that is meant to be bought, held, and relied upon for dividend income and long-term growth.
Zimbabwean fine Chibuku International beer. Chibuku International beer.
The name, you almost guessed it right, is Delta Corporation. To better understand its allure, we should track our steps back to 1946, when it emerged from a single brewery to become the diversified industrial powerhouse it is today. Delta successfully holds the major beer brands and the Coca-Cola franchise. This vast network is not just a company, it is the lifeblood of the beverage sector in Zimbabwe and beyond. A true safe haven for savings and a core component of the millions of portfolios in Zimbabwe.
Rolling down to Salisbury town.
History carries a stern and haunting warning for anyone who believes that a corporate giant can never fail. To see the future clearly, let's look back at the ghost of ZISCO Steel, the Zimbabwe Iron and Steel Company. In the 1980s and 90s, ZISCO was not just a company, it was the heavy industrial backbone for the whole nation. Headquartered in Redcliff, ZISCO was easily one of the biggest steelworks in Africa. It employed 5,000 workers directly and sustained 50,000 jobs indirectly. Steel was important because it fed into everything from rail transport to mining, engineering, manufacturing, and construction. A functional ZISCO signaled to the world that Zimbabwe was a capable country, processing its own massive iron ore and limestone into finished products for export to Europe and Asia. Its annual turnover cleared $1 billion. It felt absolutely invincible. The collapse of this Leviathan didn't happen overnight. It was an insidious, decades-long erosion. The rot quietly started with the failure to look forward. While global steel technology advanced, ZISCO's management neglected critical capital reinvestment. Maintenance was deferred. By the time Blast Furnace number 4, the heart of operation, which produced 70% of the company's steel, suffered a catastrophic breakdown in 1993, the machinery was already functionally obsolete. Worse, the decay was accelerated by systematic mismanagement, nepotism, and boardrooms operating without full oversight. Strategic decisions were replaced with political convenience, and by the mid-2000s, forensic audits revealed massive looting and questionable contracts that completely bled the company's reserves. When structural economic shocks hit in 2008, hyperinflation, the devastating power grid failures that literally left molten materials to freeze inside unpowered furnaces, the trade tariffs shifts, ZISCO had no financial buffer left. The giant crumbled to a complete halt, leaving a trail of broken supply chains and a community thrust in poverty. The lesson of ZISCO Steel is brutal, but simple. Scale will not protect you from lack of vision. If you do not innovate, if you don't maintain your core infrastructure, and if your leadership relies on historical dominance and not operational excellency, even the biggest empires will turn into rust. Now let's bridge the gap. Let's turn our lens back to the modern giant, Delta Corporation. Delta truly looks invincible. It recently achieved the $1 billion milestone in annual revenue. Its sorghum and lager beer growth is soaring. Its recent consolidation of Schweppes Africa is deepening its footprint. It truly looks like a financial fortress. But the ghost of ZISCO Steel teaches us that structural cracks don't start with an explosive collapse. They start quietly beneath the surface where your average retail investor rarely looks. And if Delta has vulnerabilities, where could they be hiding? The first major risk lies in shifting route to market dynamics and the exploding informal sector. For decades, Delta relied on a structured formal distribution network. The supermarkets, licensed retailers, wholesalers, and bottle stores. But Zimbabwe's economy has rapidly informalized. Millions of transactions are happening informally. This presents a double-edged sword. While Delta has adapted to push volumes of product into these spaces, informal markets open floodgates to aggressive low-cost competition. If you walk in any busy street in Bulawayo or in Harare, you will notice that there are many products that are beverages coming from South Africa, Zambia, and Mozambique, undercutting the premium pricing of Delta. Just like with ZISCO Steel, imports undermine the premium pricing of the local producing companies. The second fracture is the unrelenting pressure of policy headwinds and regulatory costs. Operating a massive manufacturing business in Zimbabwe means navigating an ever-changing fiscal landscape. Consider the special sugar tax as an example. It has forced Delta to pay millions of money, taking it away from its bottom line under the pay now, argue later principle. Delta has tried to maintain the operations at the same time accommodating the price-sensitive consumer. We haven't even started about the persistent friction of the multi-currency system, which makes it hard for Delta to access different supply chains. When a company is as big as Delta, even a minor change in policy or taxes or export locks millions of dollars in liquidity. Delta's management is currently running a tight and efficient ship, but the external environment is relentless. For a critical investor, the question isn't whether Delta is winning today. The question is, if these regulatory costs continue to mount, if the informal imports continue to flood the markets, does the giant possess the agility to protect its margin? Or is it becoming too big, too rigid to pivot? To assure this modern giant doesn't follow the path of past industrial casualties, retail investors must look past the headlines and monitor three critical metrics. First is the return on capital employed, which reviews exactly how efficiently management deploys capital. Second is dividend payout consistency, because in a volatile market, real cash paid into your account is the ultimate proof of genuine free cash flow and respect for shareholders. Finally, look at the current ratio and debt to equity to check the company's defensive shield, ensuring it isn't leaning on unmanageable borrowing, the very trap that crushed ZISCO Steel. And really, the buck stops with you, because Delta remains a top buy in the Zimbabwe Stock Exchange market. This video was about making sure that you don't just buy a company or you just don't buy a stock because it's a big company. You have to stay informed, keep reading, and choosing that over historical evidence, because Delta has been there, it has weathered many storms, but it doesn't mean it's invincible.
It is now my privilege and honor to declare the Delta Beverages Sparkling Beverages bottling line, new state-of-the-art returnable glass packaging line, as well as Chibuku Super Plant officially commissioned.